This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 1st, 2016. Euro dollar. So the euro continues to be very well capped into rallies towards 110 with a lower top sought out at 110.60 ahead of the next downside extension. Look for a break below recent lows at 107.11 to strengthen this outlook and expose the critical December base at 105.21 further down. Sterling dollar. So cable continues to consolidate off recent lows at 140.80, which were the lowest level seen since March 2009. At this point, though, technical studies are showing overextension and the possibility for additional corrective upside before this market even considers the possibility of additional meaningful downside. Look for a break back above Friday's high, which came in around 144.13, to strengthen this outlook and open the door for more significant correction into the 146 to 148 area. Dollar yen. So dollar yen has had a surge over the past several sessions, with the market trading from the 118 area all the way up above 121 and into Friday trade. And this opens the door for the possibility of a retest of some key internal resistance now around 122, looking back to that high that we saw all the way back in March of 2015. At this point, though, additional upside beyond 122 is seen limited, with the possibility for this internal resistance to act as a cap ahead of the next downside extension back towards those recent lows around 116. Only back above 122 on a daily close basis would compromise this outlook and suggest that the market is putting in a more meaningful base ahead of a longer-term bullish resumption. Euro Swiss. So Euro Swiss has broken out in recent trade after several months of consolidation. The break above 110.50 now exposes the next upside extension towards a measured move of 114 over the coming days. At this point, any setback should continue to be very well supported into the 108 area, while only back below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie has seen a bit of a bounce in recent trade, though any gains are classified as corrective, with the market looking for the next lower top ahead of a bearish resumption back below recent multi-year lows at 68.27 and towards the 65 area next. At this point, rally should be well capped towards the 61.8% fib retracement off of the recent major move, which comes in around 71.70, with only a close back above to really compromise the immediate bearish outlook. Dollar CAD. So we've seen some sharp setbacks in dollar CAD over the past several sessions off that 146.90 near 13-year high from early January. But at this point, with the market now unwinding from those overbought studies, there is risk for a bullish resumption and a higher low somewhere in the 138 to 140 area ahead of the next major upside extension and bullish continuation beyond 146.90. Really only a close back below 138 would take the immediate pressure off the top side. Kiwi dollar. So Kiwi has been in the process of consolidating the latest declines at 63.47, with the market now expected to trade lower, finding a lower top and heading back below 63.47 and towards the 2015 base, that multi-year low at 61.30. At this point, look for any rallies, therefore, to be well capped towards the 67 area. Ultimately, only back above 69 compromises the bearish outlook for Kiwi dollar. SPX 500. So although we've seen a bit of a bounce in recent trade out from those recent 1811 lows, the market gains are classified as corrective, with the broader structural shift underway here following the breakdown below that 1834 low that we'd seen back in August of 2015. At this point, this upside should be well capped towards some previous support now turn resistance at 1993, with only a break back above 2000 to compromise this newly adopted bearish outlook for the S&P 500. Gold. So gold has seen a major structural shift over the past several days, with a meaningful base now looking to be in place at 1046, that multi-year low from late 2015, in favor of the next upside extension towards the 1192 October 2015 peak. The break above 1112 in recent trade sets up a fresh higher low now at in the 1070 area and confirms the prospect for this fresh upside extension. Only back below 1070 would now compromise the newly adopted bullish outlook for gold.